Eric Mwather with Mwather.com with world market analysis for the weekend of November 19th and November 20th, 2016. Let's take a look at markets here at the close of Friday's session, and we can see a mixed picture. We can see that China was down, Japan was up, Australia was slightly up. So let's call it a mixed picture. Take a look at European markets at the close of Friday, and we see also here a slightly down day for the FTSE, DAX, and the French market, so slightly down. We take a look at the Americas here with about 2 hours to go before the close, and we can say it's pretty much a slightly up day as far as Brazil is concerned, and so is the Canadian market. And we can see that the S&P 500, again with 2 hours to go, is slightly to the downside. Let's take a look at those world charts. Let's begin by taking a look at Australia, and we can see even at the end of this past week, pretty much still continues to respect the top side of the weekly RSI. So this is where it needs to move above if it is to see higher prices, and on the downside there's been support. So definitely stuck within a range. At some point we are going to resolve either with a breakout for another continued move higher, or a breakdown to continue the drop that took place here in the month of, let's call it about late October. So still within the wedge, tough to predict which way this one wants to go. And actually we can see challenges of this on the daily also. The market's struggling to move above the recent RSI topside resistance, so this line here continues to be a problem. Until the market can move above this range, one can expect a sideways to down market as far as Australia is concerned. If we take a look at China, we see that it continues to show the crossover here between the 13-week moving average and the 34-week moving average. We've been saying that as long as that's the case, let's give it the benefit of the doubt for upside action. And don't forget that we are seeing a breakout over the last, let's call it 2 or 3 weeks, above the previous 2016 weekly closing high at 3108.10. So as long as it is moving above this level at 3108.10, as long as the moving averages are crossing over on the weekly, chances are this could actually be preparing to move higher, and so we give it the benefit of the doubt. The last time, again, like I said in my last video, we had a crossover here between the 13-week going above the 34-week moving average. You can see the market had a chance of this huge spike. So we might see that we might get some type of a move higher. How much higher we can go, who knows? But for now, you just have to assume that it's starting to improve with higher odds of improvement until it falls into runs into resistance, and I don't see any resistance on this weekly chart. Now if you take a look at the Japanese market, we can see the Nikkei finally moved above the recent weekly closing high. Also happens to be the recent daily closing high. So we did move above that range, and the price that it needs to hold above is 17,572.49, which is the previous weekly closing high going back here to about April of this year. So as long as it holds above that, we have to give it the benefit of the doubt to move higher. Okay, and also we can see here that there's a crossover again between the 13-week moving average moving above the 34-week moving average, which might suggest that again odds of moving higher continue. Now what I see here, unlike the previous chart for China, is I see potential for resistance. If you take a look at the top side RSI resistance line, we are coming back to test this line here. So that's one layer of potential resistance unless it can move above that. And there's also another resistance line coming from the previous break off the highs. So this RSI break right there during the period of the highs here. Right, so we draw a line from there, and we are coming back to test that line, extend that line this way. You can see the market did react to this line during the highs here, and of course we had a major pullback. We haven't been back to those levels since, and now the RSI is coming back to test the same level. So week to week resistance around here would be a sign of confirmation of short-term resistance, suggesting that the next swing trade would be lower. Otherwise, if it can break out, so let's assume that it can break out above those two lines, and also if it can continue moving its price above the previous recent weekly closing high as we discussed. So price breakout above 17,572.49 is good. As long as it's holding above that range, that's good. If the RSI action can stay above those two lines, that's good. On the other hand, failure to hold above this level, if we crack back below that level, that's bearish. If we see resistance on those two lines short term, that's also a sign of a market that wants to pull back. If we take a look at the Nifty, I believe of all the major markets that I track, it was down the most, down about 2.68 for the week. And we go back to this previous breakout here that failed, and boy did we talk about the possibility of lower markets after this failed breakout attempt. Again, failed breakouts are notorious for taking markets lower, and since this breakout here, you can see what happened. Markets have come lower. Now I would say that, is it broken? Markets are always going to test you. One thing we can do is I would give you a target. Now we had a previous line I drew from so let's draw the line that I drew from last week, which is this line here, this breakout line right here. So the speculation was that since it bounced off this line and went above it here for this nice entry, the market was, at the end of last week, the market was coming back to test that line. We were wanting to see if it held on this line, showing back test support for a bounce, but you can see it slashed through that line, so there was no support. Okay, I would show you where the ultimate support on the weekly is. It is this level here. It's another way of saying that this is where the market began the movement off the lows of 2016, and pretty much what we are doing here in essence is coming back to test that sentiment. So this was the lows. We reacted well since then as markets have gone higher. Okay, so that's self-evident. So we draw a line from that entry right there. So you can see around here would be a logical place for a bounce. Not necessarily this coming week, but around here, if the market can bounce with any type of uniform action, it might have a chance of moving higher. Now the problem is short term. On the daily, we can see that the Nifty is trading below here. RSI holding below 30.9, just tends to be a bearish territory. Also keep in mind we are drawn a line, before I forget that we are drawn a line here, which is the movement of the RSI off the lows during this entry. So we draw a line from there. We were expecting some type of support. That failed as the market cracked below that level. So we cracked there. And there's also topside resistance that is coming into play over the last couple of days and going into late last week. So the market had come back, tried to move above this blue line, and was rejected during the highs here. So in fact, if you take this daily chart and summarize it, you'll see that this market has a lot of work to do. It needs to be above this line, which is currently the resistance line, if it is to start recovering. So you can see that at some point it might have to move above the blue line if it is to start recovering. So net we can assume that this market continues to be trading heavy based on the fact that there's a lot of work it needs to do. RSI trading below 30.9 is also bearish. On the hourly, one thing I do note here for the FTSE, not for the FTSE but for the Nifty has been making lower hourly lows, but there's a slight improvement here on the technicals. So maybe a little bit of hope, but I would not put my hope on that. The key here for any movement higher, the number one requirement here is for the market to recover, it needs to be trading above the 30.9 level. So until the market is trading above 30.9 level, there's a little hope for recovery right now. And don't forget, there's a risk as the market is approaching the 50 level on the monthly chart. There's a risk that if it cracks below 50, one can expect an even deeper drop. So that's the risk, that if it drops below 50 on a monthly, expect a big down month into the close of the month. If we take a look at the bank Nifty, and we discussed this over the last weekend. You can see here there was a breakout attempt that failed, so that's not good. So on the monthly there was a breakout attempt, and now we can see that that breakout attempt failed. It's not good. And also the market had come back to test this recent break, not recent, but the break off the highs of 2015. So this break here in the RSI brought the market lower. We had come back to test that level, and unfortunately for the bank Nifty, we've hit that level twice. In other words, it is a confirmed double top, which might be double important, which opens the possibility of much lower prices as of right now. Keep in mind, if you go to the long-term monthly view and draw a line where the resistance is taking place on the monthly, just draw a line right there, you'll see that the biggest drops over the last, let's say, 10 years or so have began with the markets moving below the red line. Here for early 2008, we moved below the red line for this bear market move in 2011. We had resistance on this line off the highs of 2013. We broke below here in 2015 and dropped, and now we are back here showing double top rejection. As I said, double top rejection means double important. Chances are it opens the possibility, the idea, and the odds that the next major direction could very easily be lower. And keep in mind, if you go back and check last weekend's video, we talked about the daily chart showing resistance because the market had pretty much come back to test this line here. So we talked about this line. This was a break off the highs. We came back tested it here, failed. We had come back here at the highs of last week, tagged that line with uniform activity, and of course we have failed. So that made sense. And there was also another line, and not to belabor the point, but there were two lines. There was a break line here, and we draw a line from there. You can see that we hit that line with uniform activity, and we've pulled back since. Now I'll show you two lines that could come into play for support, and the first one is a simple line connecting RSI lows. As you can see, this line here, markets been coming here and tagging that line and holding. So day to day, if there's going to be support, it's going to have to be on this line. Otherwise, failure to hold above the line here could be a problem. So a break below that line could actually be a sell signal. There's also another line coming off the lows here. So this line was a good entry off the lows. Market is still higher since then, so we can use that as support line down the road, and let's test that. We can see the market has been coming back and holding on that green line. So let me remove all that stuff and show you that green line again. It comes from this entry right there. So you can see if the market can bounce on this green line, that's good. And then we bring back the previous support line. If those two lines can offer support day to day, then this could stabilize. Otherwise, a break below those two lines definitely would be a fresh sell signal. You go back to last week's video, I talked about the possibility of the South African market bouncing this week, and yes, we seem to have got a bounce. And this is just simply based on the entry of the low. So it's not like I was, some type of Houdini, but what I was looking at was this level here. This was the ideal entry of the low, so we just draw a line from there. The market was essentially coming back to test that line. If it shows support with uniform activity, it's a bounce. Guess what we found this week? The market is reacting with uniform activity above that line. So for now, it's doing what it needs to do to hold support. Keep in mind, we also took a look at the long-term weekly chart going back to 2008, and this was the movement off the lows in 08 here, brought the market off the lows of late 2008, and we went on a fantastic recovery run. In essence, we were coming back to test this line. So the green line had been tested here in late 15 for the lows there, was being tested here over the last 1-2 weeks. It held, and so we can assume that was good enough support. And we also drew a line connecting RSI lows and that was also coming in play. You can see it connects nicely with the most recent lows line, of course, here and here. So week to week, South African market is doing exactly what it needs to do to begin a recovery leg. If you take a look at the N100, the Euronext 100 index, I still maintain that European markets continue to show this sideways action. You got bottom side RSI support and you got top side RSI resistance. We are stuck in this wedge. That might explain why this market has pretty much been sideways over the last couple of months. No direction yet. We take a look at the daily and you see the same type of evidence of you got bottom side support here and you got top side resistance. This market continues to be stuck in a sideways action. Tough to read which way it wants to go. And if we take a look at the FTSE on the weekly, we can see that this past week it was holding RSI 50 here, which is exactly what you want to see. Also, it happens to be a line connecting RSI lows. So as long as it is holding this line, as long as it is bouncing on RSI 50, we have to assume that it is doing exactly what it needs to do to stabilize. And if RSI 50 is holding, the idea that it moves back to new highs is back on the table. One thing I noticed for the FTSE on the daily, I noticed that we kind of seem to be stuck in this wedge short term. Of course, we are going to decide which way we want to go by moving either above for continuation of this support and a move higher, or we break down and we start seeing lower prices. So really stuck in a range. Like I said, tough to read which way this one wants to go. You got top side resistance while you have bottom side support being confirmed. So you're stuck in a wedge in the RSI and also in price, and without knowing which way you want to go. But on the weekly, the main takeaway is as long as we are holding the RSI lows line, as long as we are bouncing on RSI 50, we have to assume that net this still looks good. Of course, at some point, if we break below 50 and if we break below the blue line, then we can start turning bearish yet again. The Canadian market positive for the week, about 2%, and I believe it's starting to look pretty interesting here, or let's call it positive and bullish. You can see that the previous breakout line, so this entry here brought the market above this level. Market is still above that range. We draw a line from there. You can see we've bounced on this line on a couple of occasions here for this re-entry. We bounced on the same line for this re-entry, and also here we've tested the 50 RSI level, and now we are back moving higher. So as I say, as long as the market is bouncing successfully on this green line, chances are the idea that it breaks out to fresh 52-week highs is now back on the table. And you can see that the level it needs to hold above for it to break out is 14,939.04. So if it can break out above that price range, man, that's a bullish move. Otherwise, if we take all that stuff out, one thing you'll notice here is pretty much we've been trading within a range. As you can see, we've been pretty much trading sideways here in this box. So we would need to take out that 14,939.04 level if we are going to clear this range and start building to the upside. And one thing I do like about the Canadian market right now is that it has turned positive for the month. As long as it is positive for the month, we give it the benefit of the doubt. Remember, we had drawn a line. Take a look at the long-term picture here. We had drawn a line where it was showing resistance when it was down for the month. So go back to the break of 2015. So this break here was being tested, and once the market was down for the month or negative, that was a bearish sign. So keep in mind, this was being tested early in the month. It was down. You don't want a down month on the RSI here, because that would be one of the worst places to be down for the month, because prior to this this line has been a problem for the Canadian market. The major bear markets have begun with drops below this red line of the highs of 2000. Here, resistance below that, above the red line and back below it for the highs there. Uniform activity above the red line, back below it for the highs there. So as long as it is positive, it is doing its best to not find resistance on that red line. So that's a good thing. Otherwise, failure to be positive, and if it turns down for the month, would be confirming resistance on this line, which is not what bulls want to see. Otherwise, if you are bearish, you want resistance on that red line, you want the market to turn down, and then that's going to be evidence that the next major direction is going to be down. So far, the bulls are winning that argument. One thing I'll say, don't expect the market to have a straight shot to the upside. You got this topside resistance line that is going to come into play. So until it can clear this resistance line on the daily, it might struggle. But if the monthly chart can improve, if it can clear this resistance, there's a chance. But for now, expect some resistance here in the coming days on this line short term. Take a look at the EWZ, and to keep it simple, take a look at this bounce at the RSI 50 level on the weekly. For the lows here, the market would go on to record fresh highs. We are seeing the same thing here. If it can hold, if the market can hold the 50 RSI level and build on that, then chances are we might actually come and tag fresh highs. Now, there's also a line connecting RSI lows on the weekly that needs to hold right here. So support around RSI 50, holding above the blue line, is actually very bullish for the Brazilian market. Of course, we know that if it breaks below 50 and also breaks below the blue line, that's going to be a fresh sell signal. And a quick look at the daily. I think the daily is doing its best to hold support. Come back to the lows here in January of this year and just draw a line from there, and you'll observe that right now the market is actually doing its best to hold this line right there. And right now it looks like nice double bottom support, in my opinion. As long as this is how it looks and continues to build on this, I would speculate that around here is good entry. Keep in mind the last time we touched the green line with uniform activity was here, and before that here, which was here. So anyway, what I'm trying to say is, as long as it is bouncing on this green line and holding on the RSI, you have to give it the benefit of the doubt to move higher. Obviously, given that the line is very well defined, if we fail to hold that and we move below that green line, then that's going to be a fresh sell signal. But let's keep it simple and stick with the facts in front of us. The fact is, right now we are holding above that green line. That being the case, we have to assume that for now the market is looking like it's going to stabilize around here, and as long as we have support here and here, chances are the next major swing trade is going to be to the upside. Eric Mwatha with Mwatha.com. As always, good luck, peace and blessings. Enjoy your weekend. I'll see you in the next video. Peace. I am out. Mwah. Whoa. Yeah. Woo.